What is going on, traders? In this video, we're going to go over dark pool levels and how you can correlate that with your technical analysis. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So I'm going to try my best to make this video as easy to understand as possible. But if not, if you have any more questions by the end of this video, feel free to comment below. I will do my best to either answer your question in the comments or I will make a video on a later date. So let's get straight into it. So a lot of the issues that I see a lot of retail traders have, and even I had this issue before when I first started trading, is that you're looking at too many time frames, right? You're looking at the 15-minute, you're looking at the 30-minute, the hourly. You're looking at way too many time frames. And one of my rules is, and I said this in a video before or another educational video that I've made, it's probably outdated, but regardless, you want to focus on 3 time frames. At least that's what I do. Everyone has their own rules, but for me, I only focused on 3 time frames, and depending on the time of year or whatever, I may look at another time frame. So for example, I said this in a video, or at least I commented that at the end of every week I will look at the weekly time frame, right? And then I will start marking levels on the weekly time frame, or the most important levels on the weekly time frame. And then during the week I will focus on the daily 4-hour, and I will use the 2-hour as an entry point for whatever trade I'm entering, right? Knowing me, I'm more so of a swing trader than anything. Now, given the current market conditions, I have been forced to be a day trader, right? Where I have to take profit as soon as possible, right? And that's fine. You have day traders, you have scalpers, you have swing traders. And so my point here is that you want to make trading as simple for you as possible. If you know that you panic, right? You're very panicky, right? You don't like to see any type of red, right? Which is really unrealistic. You're always going to see drawbacks when you enter a trade. That's just impossible to avoid, right? But let's say you enter a trade and you're down $15. Well, chances are you should not be swing trading because you're panicking too early. You don't have the discipline just yet. The market hasn't really humbled you and helped you understand that, hey, you're going to take losses, or you're going to see red before you see green on majority of your trades. So you as a trader, you should probably be more of a day trader, where you should be looking to take profit as soon as possible. So you should not be looking at the daily time frame, right? You shouldn't be looking at that, right? At least in my opinion. This is just my opinion. You should not be looking at the daily time frame. You should be focused more so on where you can take profit on much smaller time frames, such as the hourly, the 30-minute, 15-minute, whatever, right? And if you know you're a scalper, or you just want to take profit as soon as possible, and you don't mind making $10 a contract, $5 a contract here and there, right? Then you obviously want to look at much smaller time frames, such as a 5-minute or 15-minute, whatever scalpers use as time frames. I imagine they use much smaller time frames, right? But what's important for you as a trader is not to mark too many levels, right? You shouldn't be on a 5-minute time frame marking levels and then go to the 4-hour time frame marking levels. That makes literally no sense, right? It makes no sense to do that, right? So point being is that, again, you want to make trading as simple for you as possible, because you understand you better than anybody. If you know you don't have the discipline to hold a trade too long, probably should take profit as soon as possible. If you know that you do have the discipline, fine, that's cool. If you know you don't have the capital to hold a trade too long, or to witness any type of drawback, or too big of a drawback on a trade, then you probably should focus more on day trading, or scalping trades, right? That should be your focus. And even if you're following a Discord host, for example, me, I'm more of a swing trader, you should understand that, hey, okay, he's swing trading, he's probably going to hold this trade for a long time. Me, I don't like that. I'm going to take profit right away, and then I'm going to set guidelines and rules for myself to take profit, right? So for example, in our Discord, I tell everyone to take profit at 40%. That's always our rule, right? And it works, or at least a lot of Discord members tend to like that rule. They changed their mindset, and now they're more so focused on the percentage on where they should take profit versus just looking at the numbers. Like, oh, I'm at $500. Let me hurry up and let me take profit at $1,000 or $500. They're most sort of like, okay, I just made $200 and my trade is up 40%. I'm going to take profit, right? Simple as that, right? That's kind of the thing that I want you guys to understand more than anything. Understand you as a trader. So that's my little rant there. That's my little educational piece, right? So let's get into the dark pool levels, and hopefully everything starts to make sense on why I went over all that. So we go to quant data, right? And a lot of brokers have dark pool levels. If you're in a Discord, you can just go to the flow tab and, look it up yourself. So right here, you go to the flow tab and then you look it all up yourself. A lot of you ask me, do I post a lot of stuff in the Discord tab in regards to quant data? And I do. Or you can just search this stuff up yourself, right? The tools are available. But regardless, we go to quant data and we're looking at the SPY. We're looking for the dark pool levels on the SPY, right? And so a lot of you ask me, well, how do you draw your support and resistance? Well, it's pretty simple. You just look at the dark pool levels, and quant data isn't the only, one that has this information. You could probably find it on like Unusual Whales, or I think maybe Weeble, anything with dark pool activity, you could probably find this information on, right? And so on quant data, these are pretty much ranked by, how important they are or how much money is being poured into these positions. So or not positions but levels, right? So 559.52 is a major level on the SPY. You got 4.65 billion on this level, focused on this level. So we know that institutions are really looking to hold this level, whether it's to the upside, to the downside, we don't necessarily know, but we know that this level is extremely important. And then another level we always talk about on this channel is 564, right? 564, you got 4.09 billion on 564.01. You got 3.51 billion on 564.48. You got 2.47 billion on 564.49. So there's a lot of money and a lot of volume on these levels, specifically 564 and 559. So ideally, we want to see 564 break, or we should say 564 break or 565 break, which is our psych level towards the upside when it comes to the SPY, if we want to be bullish, right? And this is why I always say if you break below or above 564, you open the floodgates towards certain levels. So let's mark this level on our chart. So all we're going to do is go to trading view, of course, right? Because a lot of you ask me, what am I using? Or at least a lot of new traders ask me what I'm using. And you can just put this horizontal line anywhere you want, right? And then all you do is right click it, and then you can, pretty much put it where you want or set it up to where you want it to go, right? So we go back to quant data and we know that 559.52 is a key level, right? So 559.52. You click OK, and then it automatically places the level for you. And then if we zoom out, we see, or we zoom in, I should say, we see that we have bounced off this level multiple times. We broke through it, retested, broke higher or attempted to break higher, retested again, tried to break higher again, retested again. So crazy, right? Crazy that this actually works and you're witnessing the market bounce off this level or either reject this level, right? You attempted to get above it here and then you broke down. And so we go back to quant data and we can do it again, right? We want to focus on 564.01. We talk about this level all the time. So we do it all over again, right? And you can just put this line wherever you want and you just right click it and then you just type 564.01. Sorry. Click OK, and boom, there you go again, right? And so we go to the daily time frame here, and let's get a much better view. And what have we been talking about in our past few videos, right? These guys right here. These guys right here, and you do not want to be in the territory or the range of these guys right here because they're foaming at the mouth. They're waiting for any type of bad news and they're going to try to drag the SPY down. And we've seen this happen multiple times, right? If we zoom in here, we see that bears have continued to try to step in and break us below, or at least hold us below 564, right? So we understand that this level is very, very significant. And so what happens if we break below a dark pool level? So let's say we break below 563.98, right? So we break below 563.98, then there's a good chance, right? There's a good chance or potential chance that we can head back towards the next dark pool level towards 559.59 and possibly trade within this range, or we break further down and we start heading towards 550 until a new dark pool level is formed. So pretty simple stuff. So again, we know that 563, right, 563.98, I believe, is our key level. If we manage to break below 563.98, then chances are we're going to head towards the next dark pool level towards around 559 point whatever it was, right here, 559.52. So we know that these are the key levels, and the SPY is most likely to trade within this range until we break into either direction, whether it's above 565, we'll say 565 because that's our psych level, or it's below 559. And then if we do break below 559, we know as traders, we know that we're very illiquid all the way towards 550. And this is why I always say if you break above 564, you open the floodgates to whatever level, such as 570, so on and so forth. And then if you break below, 559 or below 564, you open the floodgates to 550, 540, right? And so far, we're just not getting a clear direction on which way the market really wants to go. We just pretty much been consolidating here. So pretty simple stuff, right? It's nothing too complicated, right? And we live in times where things are a lot easier. So I know a lot of you as traders, you see, indicators and technical analysis, and you think it's very complicated, but there's a lot of tools out there that gives you the answers, right? That really just gives you the answers. You just got to look at it. 559.52, that's a key level. Cool. Go on your chart, mark it, you're good to go. And then you just wait to see what happens when the SPY hits those levels. And you can obviously look up the dark pool levels for any type of stock, right? But we're not going to go over every stock. But regardless, you can look this stuff up and it does the work for you. All you have to do is just mark it on your chart. So it's nothing complicated about support and resistance. Again, you can either use indicators to do the work for you. I haven't found the indicator that really is good at marking support and resistance. I think dark pool levels are the best thing you can possibly do when it comes to marking support and resistance, because we know that these are institutional levels. We know that institutions are putting bags in these levels and they're trying to either hold these levels or they're trying to break these levels. Simple as that, right? So the lower we go when it comes to these levels, the less money is being put in. So we can say, I guess, the less volume you got on these levels. And you can use volume profiles and things like that to determine this. But me, again, I prefer dark pool levels. That's just something I started doing. I've never got into volume profiles and all of that, which I'm sure works. I've seen a lot of traders use it, but me, this is my bread and butter when it comes to marking levels. And so we look at, other things such as gamma exposure, right? And so we're looking at the SPY here, right? And I said this in the Discord the other day, bulls are just not present on the SPY, right? Despite everyone's excitement, and this is part of the reason why it's hard for me to be bullish for the next upcoming week or so until I see more bullish activity when it comes to gamma exposure. But right now you just see nothing but put exposure here, right? And so right here, if we look right here, we see a lot of put exposure at 565. 565 is our psych level here. And so if we go to SPY and we go to and we're on the 4-hour time frame, by the way, we see, let's actually go to the daily time frame. We see that bears continue to try to push us below 565, and they're succeeding, right? They are succeeding. And how do we know that? Is by simply looking at these bearish wicks. You got bearish wick here, bearish wick here, bearish wick here, but you wick here, and you barely have any bullish wicks, or at least in comparison to the upside, you barely have any bullish wicks in this area. So far we know that bears are really trying to keep us below 565, within 565, 559 range. So we know this, right? And so we go back to quant data and we see that the next level where there's a lot of put exposure is 564, right? We talk about 564. So as long as we stay below 564, we can be looking at a move towards 560, where there is another put wall. And that's kind of how you got to look at these things. You just look at them as put walls or, call walls and things like that. So if we manage to get above within the 566 range, there's a good chance that we can head to the next level of 567 and then possibly start heading as high as 570, right? So that's another way you can use quant data in correlation to your technical analysis, right? You can use dark pool levels, and then you can look at the gamma exposure and kind of determine where the majority of puts or calls are, right, when it comes to gamma exposure or just gamma. And so gamma exposure also lets you know, how can I explain this? Gamma exposure lets you know how the probability of your in the money trade hitting by expiration. Hopefully that makes sense. Let me know if that made sense the way I worded that. But ideally, let's say we know that 565 is a key level, right? We know that there's a massive amount of puts at 565. So if you're the type of trader that takes in the money contracts, you can do a 565 put, and you're really taking a low risk trade here, right? You take 565 puts, your odds of that trade being in the money and profiting is extremely high, at least in my opinion. You are looking at a good chance of winning a lot of money, not a lot of money, but winning a lot of your trades just simply by looking at this, right? So you know that 565, there's a lot of put exposure. So every time we hit 565 or even 564, you can continue to take in the money trades. Let's go to like the 2 hour time frame. You can continue to take in the money trades and your chances of success is pretty high, right? Because we know that there is a lot of gamma exposure there, or a lot of put exposure in that area. So every time you hit, let's say 564, let's say you took a trade here, you would have made profit. And not even that, not only that, but let's say every time you got back below 564, well, we know that 565 is a key level here, and 564 is obviously a key level here. So every time we get back below this put wall at 565 or 564, we can take an in the money play. So here, for example, if we broke back below 564 right here, or we actually did, right, we could take an in the money play, and then we would have made some, some change here, right? Same thing here. You hit 564, you wait for that rejection on a smaller time frame or whatever, and then you take an end of money play here, or you can just risk it right here. Again, we know that that is a very key level, so your risk to reward is pretty good. Okay, I would argue. So that's pretty much how I use dark pool levels, or I believe how the average person should use dark pool levels, average trader should use dark pool levels. And then this is another way to pretty much, I would say this is more so for in the money type of plays, gamma exposure. If you manage to break above this, then obviously you can do some type of out of the money play, or you can do a 565 call, right? Because you broke above 565 and 564. So you can do a out of the money call, and then you can hurry up and do a play towards 566, or you can set a profit taking target at 566, make a quick buck or two, whatever the contract allows for you, and then you continue to do the same process. So I think this is a very, very good tool. A lot of you ask me, is quant data worth it? I think this thing is absolutely amazing. Link will be in the description below. As far as dark pool levels, again, if you want to trade dark pool levels, it's pretty simple. You set your dark pool levels again, and then right now we just know we should trade within this range. Now you are a bit above 565, or at least I guess you kind of closed above 565 after hours, but ultimately you did close at 563.98. We'll have to wait and see. And there's also a gap fill here that we just filled. So this can easily be a gap fill opportunity before we break back down. But again, if we break below, let's say Monday, we just so happen to, I don't know, open up red. If we break back below 565, 564, whatever one you decide to pick, you can take a pretty low risk trade, in the money trade, and play for a move back down to 559. So you guys let me know what you think about that. Was this helpful at all? And again, a lot of you ask me, do I put this stuff in the Discord? Absolutely. And you can look it up yourself, right? You can look a lot of this. You can look up dark pool levels yourself. I believe someone did. I don't know, but you can look up the options flow. You can look up what institutions are doing when it comes to trades. You can look up heat maps and things like that. So a lot of this stuff you can do yourself. And then I also post what institutions are doing as well. So here, for example, I posted that institutions are loading up 536 puts, or they loaded up 536 puts at close at around 4 Eastern. And yes, you can trade after hours, 15 minutes after the bell or whatever. But yeah, I post this stuff as well, guys. But again, let me know what you think. Do you have any questions on how this stuff works? Was it confusing? I would hope that this is very, very simple, or at least the marking your levels part. I understand if maybe the gamma exposure thing is kind of complicated, but just let me know. I will try to make another video on a later date, or if it's a simple question, I'll answer in the comments below. You guys know I interact with the community because I love you guys. You guys are great, or at least most of you are great. So again, let me know. Discord link is in the description below. If you want access to quant data, that link will be in the description below as well. Until the next video, traders, have a good one.